High network price forecast. PI languishes amid declining social buzz. WTI crude oil returns above $93 as concerns about the ceasefire grow. Fed. FOMC minutes reinforce rate cut path risks. UOB. Hungary's election could end Orban era and reshape its place in Europe. Silver erases the ceasefire gains following the strikes on Lebanon. Eyes on negotiations. Portugal global trade balance dipped from previous 7,457b to both 7,951b in February. Ireland HICP, year over year, meets expectations, 3.6% in March. Ireland Consumer Price Index, MOM, up to 1.6% in March from previous 0.9%. Indian shares tumble amid doubts over US-Iran ceasefire.
Euro/US dollar edges up, nearing 1.1700 despite the cautious market mood. Japanese yen underperforms as oil prices gain ground.
Bitcoin price forecast. BTC struggles near key level amid US-Iran ceasefire doubts. US CPI report coming up tomorrow. What to expect? US dollar INR recovers amid uncertainty ahead of US-Iran talks.
Morning bid. Relief rally hits pause.
South Africa Manufacturing Production Index, year over year, dipped from previous 0.7% to 2.8% in February. Romania, Q4. GDP growth unrevised at 0.2%. FTSE 100. Modestly lower as Middle East tensions weigh. PLN. NBP pause, extended by Iran shock. Commerzbank.
Good morning.
An important resistance line is being approached by pound yen. This price has been tested numerous times in the last 8 days.
Because NAS 100 has formed a channel up pattern, we expect it to touch the support line. If it breaks through the support, it may move much lower. How have interest rate expectations changed after the ceasefire announcement?
Yeah, 6-minute warning.
Yen. Investor flows signal shifting bond appetite. MUFG.
All right. Good morning. So what are you trading today? Risk on, risk off? What's on your mind? Let me get comfortable. So, guten Morgen, ja. So, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's go! Dun, 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 dun. And the lighting is always weird in here. It's just maybe not a good camera. Maybe I need a new camera. Anyways, guten Morgen, huh? What do you think? Got it? Hey, my name is Wayne. We're going to do a lot of analysis today. We're going to go through our routine and analyze sentiment. Then we can do some fundamentals. We can do some technicals. I can answer your questions. You're the boss. We're using a combination of TradeRs and Trader's Way. TradeRs for our data analytics and Trader's Way for our execution. It's a perfect combo. Perfect combo. Got to be able to execute. What can I tell you? Huh? So let's start by getting a sit rep. Good morning. Let us get you up to speed on a rapidly evolving market landscape. We are currently navigating a powerful risk-on environment as global equity markets post substantial gains, led by a 3.8% surge in the DAX. This aggressive positioning is primarily driven by a significant contraction in the U.S. 10-year Treasury yield, which has fallen by 5.2 basis points, easing the valuation pressure on growth-oriented indices. Biggest movers right now, WTI crude oil, high-yield bonds, Ethereum, Brent crude oil, and DAX are up. Sorry, I'm in the middle of an audit. No, not that kind of audit. The good one. Wait, there's no such thing as a good audit. Uh-huh. Yeah, anyways. Hey, this camera view is different. Is it any better than the other view? Stream close up. That's a kind of a weird view. Too much purple? I don't know. Hey, yeah, if you can't carry purple. Anyways. Stock market hanging in there. VIX up a little bit, but hey, we'll take 21 over 31 any day.
Bitcoin still above 71. That's good. Gold just hanging in there. Oil is up significantly, so I think we got as low as 92.50 yesterday. Is that right? And then, so here we are back at 99. Apparently, all the world's problems haven't been solved. You'd like to see Wayne's AI voice singing? Well, I can make that happen, but I don't know why you would be so mean to yourself. But I'll tell you, if I go to a karaoke bar, when I get on stage, I give 110%, even though I know I can't sing. Purple Wayne, Purple Wayne. Yeah. So anyways, so dollar flat, but yields are coming down. So money's going in here, money is going in there. But some of these things are flat and some are moving. Morning, JGB. And this is where we are. Isn't that cool? So apparently we got some PCE today, huh? Eat today, huh? Hey, everybody. Eat today, huh? No, I guess we don't want to go through that echo. All right. So anyways, yeah, so what's going on in the world?
Yen. Investor flows signal shifting bond appetite. MUFG.
How have interest rate expectations changed after the ceasefire announcement?
Chevron forecasts up to $2.2 billion boost to upstream earnings from higher Q1 prices. An important resistance line is being approached by pound yen. This price has been tested numerous times in the last 8 days.
Because NAS 100 has formed a channel up pattern, we expect it to touch the support line. If it breaks through the support, it may move much lower.
Is that it?
PLN, NBP pause, extended by Iran shock, Commerzbank, South Africa Manufacturing Production Index, year over year, dipped from previous 0.7% to 2.8% in February.
Morning bid. Relief rally hits pause.
Yeah. Is it? I mean, do you like this? The movers section. So the biggest movers right now: WTI, Brent, Ethereum, Bitcoin, and the Australian stock market. Yields, 5-year yields are down, 10-year yields are down, silver's down, copper's down, and the French stock market's down. You like that? Biggest winners, biggest losers in real time? You think you would use it, or is it just sort of distracting? Hello? A little bit of a delay, I guess. Maybe my microphone's not on. No, it's on. All right. All right. I like how it just organizes the thoughts. You could just sit there and like, oh, yeah. Buying dips on Ethereum. Cool. Bitcoin, see? Yeah, Bitcoin doing okay. That is a buy a dip roll reversal, isn't it? On a 15-minute chart. And we're projected to get to 71,800. So 700 pip move right now. And notice how the target is live now. So we've done a lot of upgrades to our predictions, if you will. So all our charts are live.
US dollar, Swiss franc wavers above 0.7900 amid a shaky ceasefire in Iran.
And the projection cones are live. So they update on the tick now. Pretty neat. So let's see what you guys answered. Wait for it. There it is. Risk on and very risk on. Okay. 30% are risk off. Just so you know how we do this, we weight VIX very high. We weight the S&P 500 very high. We weight jump bonds and the 210 spread very high. Then we throw in some NASDAQ and the 10-year yield. And then we, throw in a little Bitcoin. We throw in some oil. We throw in investment-grade bonds. We throw a little bit of Nikkei, a little bit of DAX. Not very much, but it shows you global moves and that kind of stuff. So we look at all these things and we give them different weights of importance. And then we look at what's happened overnight, over the week and over the month. And then we weight those. So most important is what's happened recent. And as we go further out, well, what happened a month ago is much less important. But nonetheless, volatility has dropped very significantly, huh? And so we score them and then rank them and everything. And we do this on 3 time frames with different weightings for each. And then look at the aggregate. And so, so risk on is the answer, if you will. If you want to look at all those variables with all those weightings on all those time frames to get a sense of what all investors are doing around the markets and around different asset classes, we're slightly bullish, slightly risk on. It's a nice methodology. It's a very, very nice methodology. A lot of calculations, but it gives you a good sense. Hey, Claude King's back. Hey, Claude King, why would we want signals? Why would you want that? All right. What's on the calendar? PCE, yeah, you know me. Problem is, this is not going to have data from the war, I don't believe. I think it goes far enough back that it's backward looking enough. I might be wrong. Okay. And if you want to plan your month, cool. Now, what I think is going on here is I have way too much news. But see, now I have to teach Aiden, like, all right, building permits and existing home sales, I do want to see those. CPI for sure. Bank of England interest rate decision for sure. PCE, consumer info. Oh, so that's you, Mitch. You might want to rename that. But I don't need these, I don't think. But tomorrow's CPI, isn't it? And do I want to see Fed speeches? Yeah, I do. But I don't need to see that. I don't need to see that. So I need to teach them now. Import exports. Okay. It's not market movers, but they're important because we capture them as part of our comparative analysis of different economies. So we have a ton of news, like 26 things on the calendar today. But of them, I think a headline PCE is probably the big one, right? So we're making progress. Now there's too much information. good. But that's why instead of dumping things, I'll just have to work on ways to display them better. So like when we look at today, that's just too much stuff, right? So I'll need to go through and look at every single one of these and say, yeah, you can pass on these, you can pass on those. Japanese PPI, no, we want that. RBA speech, yeah, we want that. Business PMI, well, I'd rather have like composite PMI. Fed balance sheet, I think it's interesting, but we probably don't need to track it. Bond auctions probably don't. I don't even know what the heck that is. Do we need treasury auction stuff? Are you tracking the bid to cover ratios? I don't think we need that. So, but EIA, gas storage? No, we're interested in EIA crude oil storage. So I can delete that. You see? Claims. Oh, for sure. Income. Yep, that's important. Okay. So on and so forth. So, but the cool thing is you can teach AI. That's the fun part, right? Okay. Cool. So anyways, we got that on the calendar. What do we see here? Not a lot, huh? Now, my first thought is, oh, it's not working. Well, let's take a look. Down, up, up. Yeah, he's seen it. He's calling it. I'm looking here at the slope. Okay, the slope and the standard deviation, right? So we got slopes. We calculate that slope at the rate of change in the slope. And Aiden's interpretation of it is that's not a great opportunity to be trading. Oh, thank you, Aiden. So now, just in seconds, you can go like, oh my God, nothing really going on with the dollar pairs right now. Then you can check the yen pairs. Bullish, 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 neutral, neutral. So Aussie and Kiwi are weak. Okay, a little comeback on CAD. Yeah, well, you think oil's up, isn't it? Cool, right? So you see how fast you can check all the yen pairs? 1 second. Okay, boom. We're good with that. Let's check all the Swissy pairs. Bullish, bullish, neutral. Yeah. So CAD and Swissy are strong. Okay, got it. And that's all the cross pairs. Actually, we had a lot more. I don't know why he's dumped them. Sometimes he finds a bug, and I'm like, fix a bug. All right, so he kills it. Yeah, definitely a wait and see, Greg, which is not abnormal at all. No, not. Okay, what's going on? Crypto, not amazing opportunities, really. Well, let's check Bitcoin. And yeah, okay, a bit of a recovery. So now what we need to see is an up. We need to see a change in this slope. And we haven't really made any serious higher highs, but a higher low could do it, right? So this needs to continue. So if you were going to be a bull on, let's say, day trading or intraday trading, yeah, this is actually an interesting buy for you. When you look at 3 time frames, it's neutral. But what it's telling you is, well, today, you may be bullish and you need a pullback. You're 1 standard deviation below the mean, and this might be your role reversal. So if you wanted to go long, Bitcoin, you can just realize you don't have the trend yet. So this chart, let's say, might be profitable for you, but this doesn't say we're going back to $100,000. In fact, if this move up fails, then we're on our way back down. And so the reason it's neutral is I can argue both ways. This is an opportunity for a bull, and this is an opportunity for a bear. Wayne, that sounds like neutral. Yeah, but if you have a bias, then you would do what you need to do. Stock indices, how are we doing? Oh, no data. Interesting, no data. Nikkei. Yeah, kind of a mess. A hot mess in Japan, right? And DAX. Okay, I'm going to talk to Aiden. Okay, I'm going to put them on that. Do, 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 do. Wow. Don't! I just told him to work on this, and he killed it. Oh, no! Well, that's my bad. So back up. So we got down to 92, it looks like, and then up, down, up, since then, huh? So like I say, when you're in this situation and you're a bull, and we had dropped from well over 100 all the way down to 92, and if you were saying, well, I'm going to buy a dip, at some point you could just sit on this chart. At some point, on whatever time frame you choose, it would have turned bullish in here. Okay? This would be way down here, right? And so you could, so as it was falling, so let me draw what I'm talking about just to make sure you're following me, okay? At one point it was falling like this, and you might have been saying, well, I'm a bull, it's fallen enough, okay? At some point, you could just have this open and watch for it to statistically confirm that it bottomed out and made a higher high, okay, higher low, okay, and it is doing it statistically, right? So if you were ambushing, you could have seen a change. Now, obviously, the short term is going to change faster than the long term. So if you were, that's why we call it a scalp. So if you were going to scalp it long, you would have this open and just wait. Now, of course, we would have been way down here. So it was down, lower high, lower low, lower high, lower low, lower high, double bottom, higher high, higher low. By then, this scalp would have turned bullish. And that would be your key. On the gateway to the kingdom. And that's always going to be the case of how to trade, by the way. Not chasing the move after it's happened. That doesn't work. It's never worked. So if that doesn't work because it's late, then you need to be focused on being ready in advance. So if you thought, it's going to fall like a ton of bricks, but it will bounce, then you could sit here waiting for the bounce to be confirmed statistically and then get in. You would have been long, somewhere around 94. Okay, now we're at 99. $5 is a lot of money on oil, by the way. That's like 500 pips on a euro dollar. Like a 500 pip morning, and all you had to do is sit on this tool and wait, and then take action. Dude, that's not bad. That's pretty good. Do 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 do. This is a new tool that we launched this week, and I'm liking it. And I want to expand on this to provide even more information. And I got feedback from the TradeRs community at yesterday's live stream, not the one on YouTube, the one inside of TradeRs. And people had kind of given feedback that to take this and then create two lists. Okay. Trade this, not that. Oh, yeah, knowing when to sit and wait. Well, that's what these tools are doing. So, again, going back to this trend radar, oh, he's messing with it. There we go. Like, for example, on Hill. Sorry, it's not on Hill. For example, let's say you thought we were going to get close to $100, but we're not going to break it, and it's going to fall again today. Is that right? Well, we don't know. But let's say that's your if-then scenario, up to 100 and then down. So therefore, you don't need the swing trade because you've already planned the future drop. Okay? You've already planned for the future drop. We don't know if it's going to happen, but you're ready. And a day trade would be for follow-on, wouldn't it? Okay. So you could sit here and wait for that to turn red. And then when it turns red, you can take action by dropping into a 5-minute chart. Okay. And sell lower highs. That's when you take action. But you could say, I'm not going to take action until that turns bearish. That turns red. And realize that it's doing the same mathematics that your brain would. You're looking for a lower low to create a lower high. It's doing it. In this case, it can do it visually. That's not how I taught Aiden. So we do it mathematically. Yeah. Cool. So if it falls, then you sell. But you don't sell low, so now you have to sell a lower high. You have to sell at resistance, right? So there's your rules of engagement. You want to sell. You can't sell until that turns red. But when it turns red, now you look for the nearest level of resistance, and that's your entry zone. And so now that's it. You can just sit here. Just sit and wait. And if you're wrong and it goes to 110, well, guess what? You don't get paid, but you don't lose money. And that's the best way to be wrong. Okay, now that's a powerful tool to say, well, I think down, so I will just watch this. Now you don't have to watch anything else. And one of the things that people struggle with is, do you watch WTI on the daily chart, the 4-hour chart, the 1-hour chart, the 15-minute chart, the 5-minute chart? And the answer to that is yes. By looking at this one chart, you're actually incorporating all that analysis. So now you can just sit here and wait for it to roll over. And if it rolls over, you sell the next lower high. If it doesn't do that, you were wrong, but you didn't get a trade set up today. Cool, right? So anyways, going back to this, what does it say? Aussie dollar is the weakest currency in the world. Kiwi is the strongest. Trade Aussie Kiwi. You see that? Just like that. Boom. That's a neat trick, right? Just like that. If you're not looking at that, you're looking at the wrong thing. Oh, Wayne, I love euro dollar. That's stupid. What a stupid. Yeah. Look, it's not the right thing to be looking at. They're both weak. It doesn't make any sense. It's not a good trade. Kiwi US dollar, yeah, it's about the same as Kiwi versus euro. But it's okay. You're better off Kiwi yen long than you are Kiwi dollar long. So you would trade Kiwi versus Aussie, then you trade Kiwi versus yen long, right? You could do Kiwi versus Swissy, and then you do Kiwi versus dollar. And, you know, the first one's the best trade, best opportunity. Right? Aussie yen or Kiwi yen long is great. Second best. Okay. But if you're trading pound Swissy, it's not a good trade. Trading CAD Swissy, it's not a good trade. You're not even looking at the right thing. So you could spend an hour this morning looking at charts that make no logical sense. A total waste of your time. And so this is happening right now in the last 24 hours. When you zippity doo dah over here, it's quite a different story this week. So we go from Aussie being a dog, and it's a unicorn, actually, you know. Sorry, dogs. I don't mean to belittle the dogs of the world. Okay, so it's just, this is what's happening right now. That's what's happening right now. So maybe you're like, well, Aussie's weak, but I'd like to get long that sucker on a dip. Okay, good. But at least you know it is dipping. That is what's happening. Okay. Yeah. The best play this month has been selling Swissy, but I talked about it for, I think, every day for about 2 weeks based on the Swiss National Bank actually coming out and telling us that they wanted to weaken the Swissy. You see? So that makes sense to me. So over the month, it's it's weakened more than any other currency. And at the time, I also said the best mechanism for the Swiss National Bank to weaken their currency is by buying euro, very specifically euro. So it's kind of interesting that euro Swissy is the best combination. Is Swissy weak in the last 30 days and euro strong because of Swiss National Bank intervention? The thing is, are you missing it? So now you know. So the feedback from the traders community is to make a look at this and, right, trade this, not that. Output. Okay. I thought they had a great idea. Aussie Kiwi still the best bullish pair. Pound Kiwi, Euro Kiwi. So this, when you analyze what's going on fundamentally. Now, trend is technical, momentum is technical, and index is technical. So this is a pretty nice scoring mechanism, and it's quite granular. So when I look at momentum here, Aussie Kiwi has the most. What it's doing is we're looking at the momentum of Aussie Kiwi, but we're also comparing it to the momentum of all the other pairs. And then we're doing comparative analysis of that. And what this is saying is Aussie CAD and Aussie Kiwi have the highest possible momentum. And the other ones are relative to that highest momentum. So you could look at this and say pound CAD momentum is up, but half as much as Aussie CAD. So pound CAD is good, but half as good as Aussie CAD, mathematically. It's a nice little trick, isn't it? Yeah, it is a nice little trick. And we organize it. So CAD Swissy, a dog with fleas. Okay, seasonally for Aussie Kiwi Meta, it's up, slightly up in April, and then it will top out somewhere this month, and we'll have a nice pullback for several weeks. Maybe that's occurring now. Maybe just out of the blue, Kiwi gets strong. Well, that would actually be normal. And so we will have, 3 or 4 weeks of pullback. And then we would buy a trough in May and hold it all the way to July. Good to know, right? Yeah, so that's all on these charts. So we're at 121. Looks like we could probably get to 123. Yeah, it's very possible, isn't it, Meta? That it just shows up. So this is pretty good analysis. It's pretty good. It's better. We've made some improvements here. It still feels a little bit barren. I think I could probably make some more improvements. And I noticed that we added the new index column yesterday, which compares the base versus the quote and creates an index of that. So it's like Aussie versus everything creates an Aussie index. Kiwi versus everything creates an index. And then you have to compare Aussie index versus Kiwi index. And it is overnight. I made it hypersensitive. So today is down. It's been up, but today is down. So some of these things like GDP, it only gets updated once a month, once a quarter. Inflation once a month, jobs once a month. Interest rates a couple of times a year maybe. But this is every day. So it's not actually quite accurate, but you could say this is daily, this is weekly, and this is monthly. It's not actually that, but you can think of it that way. Short, medium, longer term analysis of charts. And then, so it's nice. So I'll keep working on this. I'll keep working on it. It's quite good. I think we can tinker with it and get it a little bit better. But I can spend a whole day on it and make it 2% better, right? Or we can just move on.com. Okay, I've added the coloring. Now, he won't do it gradient the way I want, but he's doing something. Well, look, am I a turtle trader? No. But what you said is some of your concepts are similar. I think there's a universal truth to trading. And if you trade long enough and survive long enough, you end up doing kind of the same thing as everyone else that's survived long enough. Yeah. So what's the secret sauce? Make a decision on what you think the future is likely to be based on research and analysis, and then trade it. That's it. Like, what else is there? So if you think the dollar is going to weaken over the next 5 to 10 years, buy higher lows on euro dollar, buy higher lows on pound dollar, buy higher lows on Aussie dollar. Like, that's it. That's all there is. You just have to decide and then do it. And if you're a bull, you can only buy higher lows. If it makes a lower low, the market's no longer bullish, right? Like, so I think we make it overly complicated when we're new, mostly because we're trying to find out ways to not lose money. But that's not the secret. You don't become a trader and spend all your time finding ways to not lose money. Although I've been there and I've done all of that. But instead, you need to have enough confidence to say, my goal is to get in the trade, not out. Now, for that, you need data, and that takes time. Yeah. And the toughest part about trading is things do change, and the strength is our ability to adapt. But you don't need complicated trading strategies and proprietary indicators and all that kind of stuff. You could trade with no indicators at all if you wanted. I wouldn't recommend it, but I could do it. So the most important thing then is to make a decision. Where do you fit in the marketplace? And the more you understand why you've made that decision, the more confidence you're going to have. But the technical analysis doesn't answer like what you should be doing. Instead, it's when you should execute what you intend to do. And when you look at it that way, similar to a turtle trader, why? Because I'm long-term long and I'm buying higher lows? Well, there is no other way. Now, I did not, when I studied the turtle traders, I hated, and I'm not a hater, I'm a lover. Look at me, I'm wearing purple for crying out loud. Clearly a lover. I'm wearing white pants. Clearly a lover. All right, so I'm not a hater, but I very, 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 very much disagreed with the turtle's risk management. Yeah. But if me buying a dip because I'm a bull makes me look like a turtle, so be it. But I've never found any other way of doing it. Yeah, sexy bitch, right? Yeah. Ah! Ah! Arr! So anyways, look at our cool tools, guys. Are you even watching Aussie Kiwi for a dip? So it's down today and maybe up later, right? Like that might be your thing. You might say, oh my God, Aussie Kiwi down for a little bit. Maybe it's time to get long. Yeah, there you go, eh? But you got to have a lens. Okay, nothing here is going to tell you what to do. Nothing on your charts is going to tell you what to do. And I've said this for 20 years. Flip a coin, it'll make you a better trader. Flip a coin and say, are you going to be a bull on US dollar or a bear on US dollar this year? Make it yearly. It's just the decision. Even if it's a random decision, you either can buy higher lows or sell lower highs, or you can't. Ba 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 ba. I'm gonna go to the bond radar. Woo. Yeah. Whoa. 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 Some people hiding out in the 1 month, middle of the curve, out. Interesting. Yeah, interesting. Yeah. Is that right, though? It's interesting. People locked in basically, the closer you get to 5.0, the more that people will want to lock it in, and they did. Whoa, 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 whoa. Whoa, hey now. Interesting. And just as a reminder, if you're not sure what it means, you can just ask Aiden. Market is neutral. The Fed's on hold, and it explains why. Not his opinion. He's just reading what the opinion of Treasury traders is. Okay, we got a few more minutes yet. I got to rebuild all this stuff on. Boo! Got to rebuild it all. Boo! Okay, this shouldn't be over here, I guess, huh? We should probably put this somewhere else. So VIX has risen today. So dollar is expected to get strong by 0.41 today. Now, as this changes, all of this is going to change. So when measuring VIX over the last 90 days, and we analyze all the other assets as well over 90 days, open, high, low, close, for all of these for the last 90 days, and then be able to isolate VIX and say when VIX is up, and it is up, over the last 90 days, what did all the other assets do in that same period? Okay, S&P 500 drops by 0.87%. Dow drops by 0.82. Okay, gold is flat. USD yen is flat but slightly down. So buying dollar And for some reason, it's just statistics, pound dollar and euro dollar still went up. So for whatever reason, dollar was strong, but so was pound and euro. Why? I don't know. That's just what happened over the last 90 days. What makes more sense to me, even though that's statistically true, today I would expect a dip in the stock market. So, and we can see that there's a high negative correlation. So, cool. And that might be a buy a dip opportunity, huh? Okay. VIX up, junk bonds down. VIX up, oil up. Or oil's up, so therefore VIX is up. Remember, they're relationships. VIX up, dollar up. VIX up, gold has been flat to slightly negative. Silver has taken a bigger hit. Twice as much. So if you were going to trade metals today, you're better off based on what's happened over the last 90 days. You're better off trading silver. Scalp silver down, and then if VIX falls again, then you'd probably want to go long gold. But silver's more volatile. It has a higher beta. My gosh, it's nice to know this, isn't it? Now you're like, okay, what are the market conditions right now? Oh, VIX is up. Well, what should I do? Well, what do you want to trade? You're like, I'm not sure what I want to trade. It could be Forex. It could be, well, you should buy dollar. And you should sell the S&P 500. Maybe some Dow. Maybe some junk bonds. Oh, cool. But it also is showing you the likely 24-hour change quantitatively that you could expect. Now, imagine how many calculations it takes to just tell you dollar's going to get 0.41% stronger today based on what's happened over the last 90 days. There's a phenomenal amount of calculations to get you this for everything, but also to know what not to put on this because it's irrelevant. So thousands of calculations. And now you can just look at it and go, oh, I guess I should buy dollar today or maybe sell the S&P 500. Oh, yeah. You're welcome. Thing is, are you going to use it? And you're like, but Wayne, I don't like to trade that. I want to, you don't want to use VIX as your benchmark. Then you can use soybeans. Yeah. Brent oil is up 3.4% right now. What should you do? It's telling you dollar can go up 2.1%. And S&P 500 fall 1.11. But even better, high yield bonds are going to collapse. So, like, look, there's many outcomes, but the direction is the same. It's good, isn't it? Yeah, it's really good. So, one of the things we updated yesterday is these charts are now updating their predictive models by the tick. Nice, huh? So look at the projection cones. Wayne, how do you feel about Kiwi dollar? Bullish, neutral, bullish. It's neat, right? Fundamental, statistical, technical. So of the 3 time frames we're tracking, so think of it as 15-minute, 4-hour, and daily charts. They don't line up. Well, I know this instantly. I just know it. But look at them updating. It's right. It's doing linear projection and standard deviation calculations every couple of seconds. And it's based on this chart, the 15-minute chart here on the daily, on the day trading radar. It's analyzing the last 4 hours and trying to predict further out than the next 4 hours. But it's looking back to the London Open, and it's saying this is what we expect for New York. Fundamentally, statistically, and technically. Once again, lots of calculations being made. USDN looks better to me. What do you think? Pound dollars, should we buy a dip down near the moving averages and roll reversals, or maybe the psych level of 134? Yeah, because we're on our way to 134.50 in the New York session. So if that lines up with your bias, that looks like a very interesting buy a dip opportunity on the 15-minute chart. Okay, look at some of these guys. Beautiful. Look, prices going up. It says, yeah, get ready for it to fall. Prices are falling. Yeah, get ready for it to go up. It's nice, isn't it? There was a big update yesterday. I mean, look at how fast it is. Cool. And we have everything. We have the full Forex world. Trade all you want. Huh? Look at all the projections. Gorgeous. I'm going to have to change how it organizes, because now it's organizing the page every tick. It's too much. It's too much. Maybe every 15 minutes or every hour, or, yeah. But it's beautiful, isn't it? Pound Swissy, look, gorgeous, gorgeous. So it pulled back to 106, long and gone. There's that pound dollar down here, and see it move because it keeps organizing the page. But we have the entire Forex market with predictive models for the rest of the day, from now to the London close. Yeah, I mean, what? Oops, wrong one. Oh my God, look at that. How come I didn't get my alert? I have to tell Aiden.
U.S.
Germany.
futures dip, signaling
Industrial
lower
outlook
open
stays
for Wall
weak.
Street.
Commerzbank.
U.S.
The U.S.
futures
dollar
dip,
is mixed
signaling
versus the
lower
major
open for
currencies.
Wall Street.
United States core personal consumption expenditures price index MOM meets forecasts 0.4% in February. Germany. Industrial outlook stays weak. Commerzbank.
U.S. futures dip, signaling lower open for Wall Street.
The U.S. dollar is mixed versus the major currencies to kickstart the Thursday trading. Iran's President Pezeshkian attacks on Lebanon deems ceasefire negotiations meaningless.
Kiwi dollar, RBNZ warns on upside inflation risks. BNY.
Gold holds firm as U.S.-Iran ceasefire doubts and U.S. data loom.
Investing live European markets wrap. Oil prices bounce on fragile U.S.-Iran truce. United States personal income, MOM, came in at 0.1% below forecasts, 0.3% in February.
United States personal consumption expenditures prices, QOQ, meets forecast 2.9% in 4Q.
United States personal spending in line with expectations, 0.5% in February.
So core came out as a meet. Income slightly lower. Spending as expected. Q over Q, 2.9 as expected. No surprises at all. So Abdul says COT type trade. Well, there's lots of ways of doing this now. So let's say you want to identify opportunities on the 7-day, not just what's happened overnight, but you might say 30-day is too long. Overnight is kind of irrelevant because it's already happened. I have an update going on, so it slowed them down. Let me try again. Shoot. Anyways, a quick and dirty way of looking at setting up your trades, or at least knowing what to look for, Abdul, is this new synthetic currency indices that I built for you guys. The other way is, like you said, you can do COT. And Aussie is strong, for sure. Yen is weak. Yep. Aussie, yen long. Aussie versus CAD. Aussie versus dollar. Aussie versus Kiwi. Okay, that's the bias of the market. Now, you could also try trading the flow, which is week over week. I think I like to start here because this can come and go and come and go. So then you can also predict, like, when does it come and go? So now, again, it's helping you build pairs. And another way of doing that is to say, Aussie versus the yen that you were talking about. Yeah, see, that's a good trade. Aussie is blue, yen is red. They're lockstep, but the market is net long Aussie 20% and short yen by 13.5%. Overall, the pronounced stock spread in favor of Aussie suggests a relative strength, implying that despite current short shifts, Aussie may still prevail over yen in the longer term. Cool. So that means Aussie yen long, right? You can also get similar information from seasonality. And I'm not sure if this is going to work since I got the update going. I have my doubts, because this takes a lot of power. And there is, oh, here it is. Yeah, that's what I expected that. So let me work on that a bit. Radar. Okay, he's working on that. But that's another way of doing it. Another way of making that decision, Abdul, is you go to the asset radar. Aussie yen's pretty good. It's got a score of 4.22. Because the reason I built this page is I just went through 3 pages to say, yeah, look, you can trade Aussie yen. Or you can get all that on this one page and see, oh yeah, 4.22. That's one of the best trades that you could possibly consider trading right now. There's a few better, but it's pretty good. And it's already looking at seasonality. It's already looking at the charts. Okay, here's your seasonality. It's already looking at institutional investors, but it's also looking at retail investors. It's looking at COT. It's looking at seasonality. It's looking at the charts. It's comparing the economies. It's comparing interest rates and jobs and CPI and GDP between Australia and the yen. And it's 4.22. So now you want to look and say, is it time to buy a dip? Well, so far the answer is yeah, probably. So now you want to pull up that chart on a smaller time frame. Okay, you can look at it here, which is the one we just looked at. Okay, beautiful though, huh? We're exactly 112. Or you can go to the day and let's do Aussie pairs in this sense. Aussie set to kill euro. Aussie, okay, having problems here. Set to beat CAD. But look at the yen. So you've known for days, if not weeks, that Aussie yen long is something that you should very much have your eye on. Yeah. Like this should not be a surprise, right? Like you've had it planned for weeks. You know, seasonally, you know, technically, you know, fundamentally, you either know or you don't know. If you don't know, you missed it. But this is adjusting in real time. This is such a simple chart. You don't really need much more than this. Well, no, if you're a day trader, fundamentally based, you'd be a bull on Aussie yen every day. Every market open. Asia open, London open, New York open. Well, the issue with Fridays is we plan Fridays, basically it could be Wednesday or Thursday. So right, what many new traders do is they say, well, I can't trade on Fridays for some reason. Really? It's not that Fridays are bad. It's that Fridays people are preparing for the weekend and they're preparing for the next week, where an amateur retail trader just logs in and they want to make 25 pips and they're done for the day. Well, they don't realize what institutional investors are doing. They're like, well, I got to cover my ass because of the risk of the war over the weekend. So instead of accumulating, I'm hedging or taking profit and exiting, going to cash over the weekend and then coming back on Monday. Well, if you knew that, then you would say Friday is a down day, but Monday and Tuesday and Wednesday are up days. And with that in mind, we plan all that out on Thursdays. So that's exactly what we're going to do at Traders this afternoon is we're going to plan all of next week. Right? So it's not that Fridays are bad. You're just not doing the right thing on Fridays. Or you might be showing up at the wrong time and everything's already been done. And that, right? I find even Thursday afternoons, Monday swing trades are already done. Let me say that again. We meet at 4 o'clock on Thursdays to plan next week. And very often, Thursday at 4 p.m. is already a bit late. People have already placed their bets for next week. Now, with a war going on, that changes people's behavior. And so anyway, so you could think of money comes out on Friday because of the extraordinary amount of risk that the weekend poses. So that means even though Aussie yen is up, people might take profit tomorrow and bring it back down. But then you'll buy it back on Monday if we go back to a risk-on scenario. So you still have to know how to trade, but the technical analysis is easy. But if you don't know how to be a trader, then that's the next level of complication. You're like, oh, I never thought about it that way. Well, yeah, that's it. You have to learn how to be a trader. That's why we can do things like plan the first quarter, plan the second quarter, plan the third quarter, plan the fourth quarter. We know what institutional investors do or behave. No, Wednesday's too much. That's why I do swing trading. So we do a swing trading meeting Thursdays at 4. So Thursdays at 4 is fine. We've been doing it for years. Wednesday, I'm usually taking profit based on the previous week's swing trade. So think of it this way. We plan on Thursday because you probably want to enter the trade Thursday or Friday if there wasn't a war. Because we're not afraid of the world radically changing over the weekend, right? So we look for that dip on Thursday afternoon, right? Around somewhere between the London close and the New York close. It could happen Friday. Okay? And then we want to ride through the weekend or enter it on Sunday when the market's open. We don't know. That's what technical analysis tells us. When and at what price. But we already know what we want to do. So it might be Thursday afternoon. It might be Friday. It could even be Sunday when the markets reopen. Every week's a little different. But the thing is, you know what you intend to do. And the second thing is, if you get it right, so whether you're long Thursday afternoon, Friday, or on Asia Open on Sunday, you're probably going to be long Monday, Tuesday, Wednesday, and after 3 days, you're probably hitting some targets. So you could take profit. Is it going to happen Wednesday or is it going to happen Thursday? We don't know. Is it going to happen Friday? We don't know when we're going to hit our target. But when you hit your targets, then you can expect pullbacks. And that's why Thursday afternoon or Fridays can be pullbacks because we've already hit the target for the week. So we want the dip because, another breakthrough for traders, by the way, is understanding if a market is bullish, there are no bears. Let me say that again. If a market is bullish, there are no bears. That means bulls buy in a bullish market and bulls sell in a bullish market. Then bulls buy in a bullish market, then bulls sell in a bullish market. What are they selling? They're taking profit. There are no bears. Once you get that breakthrough to say, well, obviously the market's bullish, I want to buy a dip. Cool. But there are no bears. That's why you have to know fundamentals and longer term technicals. You see price going up and down, but you have to understand, is it bullish or bearish? There's a big difference. Okay. Cool. Yeah, so Greg says he places limit orders. Yeah. Limit orders are quite good for that. Let's go to Trader's Way here. Yeah, in particular, like with pivots, I was going to give an example, but these are, right? Looks like I got bearish engulfing on the hourly, so I could sell lower highs if I wanted to be aggressive here. Looks like I'm already in that one. I'm already in that one, but like Greg says, to use limit orders to re-enter. Yeah, often what I'll do is I'll use pivots to do it. Dude, nailed that one. Look at that. It's interesting that it did that because at the time I placed the order, I bet you the future pivot was higher. That would have been the central, but I caught it. Cool. I'm trying to think of like to piggyback on Greg's thoughts here. I could. Let's go to 4. Okay. I could say there's resistance here. Okay. I can move this stop to break even and pray that I stay in. But if it gets knocked out, I don't lose any money. But then, as Greg says, I can put one here. And if it pops, it takes this one out, and then I get back in up here. So I can't lose money here. And if it pops all the way up there, okay, now I'm concerned though, what about that moving average? So maybe there's a plan A and a plan B. You can check your pivots or you wreck yourself. Okay, and say weekly. So here's an example of planning next week. You ready, guys? All right. Plan next week, everybody. And this is using Greg's method, right? Right there. So what's the plan for next week? Enter here, take it down there. Okay, that's plan A. Plan B is it pulls back even further. And then we take this down. So this target has to change because it's more aggressive. And that's the more conservative one. Plan A, plan B, and you can use limit orders for that. But then I use a tool. Auto stop. And then I can say load position trade or swing trade. But I'm going to do a position. Okay, 222 stop, 333 entry, or take profit. Okay, and I have a happy face over there, which means if price comes up and hits that first order at 16.56, then it's going to put a 222 pip stop and a 333 pip limit, which gets me in. And then the next morning, I can adjust the stop accordingly, and I can adjust the limit accordingly to set out this plan. Easy peasy, lemon squeezy. Okay, that's one way of doing it for sure. Now, I like to pull the trigger because that's a bit of a bet. You're like, I bet you if it goes to 16.5, it's going to drop. I'd rather wait to hit the moving average and then witness it roll over and then sell the lower high on a 5-minute or a 15-minute than sell it just because it's a pivot point, you see? But you could do it this way. And this is very important for those that have jobs or people that they have to take care of, or you're a student, or you just don't have the time to sit here 24 hours a day. Some of us do watch the markets 24 hours a day. I did trade the ceasefire. Yeah. So you got to know these, right? Like you're always on. Not everybody has that luxury. So using limit orders based on your hardcore analytical bias is very useful. Yeah. And then I would say, especially if you're going to use larger lot size, larger stop sizes, right? And then if you use smaller lot sizes, and then build on scenarios in which you're right, and exit scenarios that you're not right, your performance will improve, right? So like, let me cancel this. You know what? I'll leave it there. So I have 2 trades there, and they're already protected. And then the other ones, that one's at break even, that one's at break even. Okay, good. So I can't lose any money. And I'm in the business right now of selling lower highs and collecting swap. That's a reasonable trade. This is a reasonable methodology. And so I could sit there, and that took, 10 minutes of analysis. And I set my limit orders. I protect myself if the trade is executed. Then I put a stop on it automatically. Don't even have to think about it. Cool. And now it gets executed or it doesn't get executed. But I don't have to spend 18 hours today staring at that. This one, I have 1, 2, 3. I have 3 trades on that one. And this one I have 1, 2, 3, 4 trades on this one. Cool. What's the theme? Currently it's on investorbootcamp.com, but I will be moving those files over to TradeRs. It just hasn't been a priority, but I will move those files over to TradeRs. Cool. Don says, have you hedged against the risk? Well, I have my stops at break. Yeah. And then in my endowments and in my retirement accounts, I'm already hedged. Yes. Yeah. Yeah. I feel very comfortable sleeping at night. Yeah, in fact, Don, I'm so hedged, I outperform in bad times. I do good. I do great during up periods, but the down periods where everybody is sweating bullets and there's blood in the street, I actually do better. Yeah, so I'm hedged up the yin yang for sure. But sleeping, yeah, I fall asleep, and this is not even a joke. I go to bed and I'm asleep in less than 3 minutes. And then I wake myself up, like today, I woke myself up at 4:30 in the morning with no alarm, ready to go. Let's go! Yeah, and then I'm straight onto my phone. Markets. What are the markets doing? What are the markets doing? Yeah, Gregors, we do have it on for MT5. I haven't logged in a while. So I can pop this into the chat for you all. Log in. Boom, boom, boom. There we go. Chart toolkit for MT4 and MT5. Okay. And we have two installers. One is the basic one, and one is the advanced one. And they have all these different files, right? And they also have templates. So it ends up installing like 2,000 files. But you need a currency indice, right? Trading sessions, auto risk management expert advisor. Yeah, that's the one I just showed you. Auto Fibonacci, auto trend and channels, our zero lag moving average, which I love to use, the watermarks. Okay, it's all there. So you just, instead of doing every file, what you can say is, yes, install everything for me now for MT5. It's nice. We also have training videos, trade planning essentials, introduction to Forex, complete complete guide to MT4, MT5, Forex trading basics, technical analysis, principles of price actions, central banking fundamentals, macroeconomic principles, swing trading 100 to 300 pips, day trading 33 to 99 pips, and the oil trading course. If you want to learn about the energy complex, you click on that and you get an introduction to the oil industry. Then you'd get the oil industry from 1850 to today. Then you'd learn about the geology of oil and gas. Then you'd learn about the upstream. Then you'd learn about unconventional oil, right? Fracking and the tar sands. Then we do midstream. And then you'd learn about oil refining. Then you'd learn about downstream, how gasoline is sold. Then you'd learn legal and compliance issues, the actual contracts that a landowner would sign with a driller, for example. Supply side analysis and seasonality of oil. And then we answer the question, who sets oil and gasoline prices? Because at the time I recorded this, President Biden was saying that the oil companies were evil and that they were gouging the good American people. And so I address that. Not politically, I address it like, well, is that actually true? Each one of these, like, how long is this one? 35 minutes. An hour and 41 minutes. An hour and 53 minutes going over leasing. Hour and 40 minutes. 21 minutes. An hour and 23 minutes. Look at us doing, this is a map of all the pipelines in the United States. An hour and 27 minutes. An hour and 30 minutes. An hour and 20 minutes going over geology. Dude. An hour and 30 minutes. Hey, this is probably pretty interesting now. We're going over, right? Look at the Straits of Hormuz. A lot of people have only learned about Straits of Hormuz in the last, 6 weeks? I mean, we talk about it here, but also what about the Straits of Malacca? That's the other choke point. So you would know all that. So an hour and a half again. Another 1 hour and a half on oil refining and transportation. Again, we're going through the map. You're learning where everything is. 44 minutes. Wait, is that the same one? No, that's day trading. That's interesting how it took us right into day trading. So anyways, you can see that one course on oil, what was that? 15 hours? Okay. Macroeconomics, central banking, like these courses are very, 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 very detailed. 15 hours is normal for these courses. And all of the courses combined together in one giant bundle and 2,000 charting files to pimp your MT4, MT5, that whole thing cost $88 a year. Can these be installed on TradingView? No, they're MT4, MT5 files. Cool. But the other thing you can do is you can search on TradingView. Okay. Search on TradingView for Wayne's pivots. Yep. Cool. So anywho, that was real. Thanks for being here. See you tomorrow. Unless you're a member of Traders, I'll see you today at 4 for planning all of next week in our swing trading class. Cheers.